Buying those dips, buying those dips. We talked about that last night, right? Well, welcome back, guys. Tuesday evening, time to get back to work. It's the 11th day of January 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background, as you can see. Got the oil, got the Nasdaq, got the S&P. Glad to see we got you right along with me here tonight. Boy, lots of great trades setting up for Wednesday. We got a big, maybe one of the biggest news reports of the month is coming tomorrow morning. We'll talk about why and kind of how we're going to trade around that news. Got some interesting charts here tonight. Got a wedge on the S&P. Got a range on the Nasdaq, and got maybe a range, maybe a channel here on the oil. But I tell you, lots of pullback opportunities for tomorrow. Lots of bull markets right now. So we're talking about buying more pullbacks tomorrow. We're talking about trading breakouts, going higher tomorrow. And you know me, I'm going to make sure we know how to trade the reversals and how to capitalize on the short side. And most importantly tonight, we'll talk about how to tell the difference between a pullback and a full-blown reversal. So we're going to cover all the details tonight. We're going to go over all my favorite trades for tomorrow. And I'll also make sure to give you some tips to keep you out of trouble tomorrow in case you're trading on your own or if you're trading tomorrow morning with us in our trade room. Before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel. I publish this video every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe. Hit that little bell icon. A lot of this stuff is very time sensitive. And if you have any questions for me, drop those questions in the comment section. Would love to answer any questions that you might have along the way. And if you enjoy this video as much as I enjoy making it, hit that like button, Appreciate you guys hitting that thumbs up and supporting this YouTube channel. But enough of the intro though. Time is ticking. Wednesday. How are we going to make some money on Wednesday's trading session? Well, as I said before, everything is pretty bullish here right now. Got a bullish market on the S&P with a wedge. Got a bullish market with a range of the Nasdaq, and a bull market into maybe a range, maybe a channel. It's all bullish, right? So, of course, we are definitely looking to buy some pullbacks, right? We may, of course, get this market and continue going higher. We'll talk about buying some breakouts, and again, we'll talk about how to short this thing and kind of how to know the difference between a pullback, right, and a reversal. So lots to cover here tonight on the video. Before we jump into each individual chart, though, let's make sure we know the schedule for tomorrow, because you could definitely argue we have some of the biggest news maybe of the month tomorrow, and that's the CPI report at 8:30 Eastern time. Now, they are talking about, and I don't want to shock you right now, but they're talking about a 7% year over year CPI print, right, tomorrow morning. It's transitory, right? It's transitory. All kidding aside, though, that will definitely be something on the radar, for tomorrow, right? What did we see last time? 6.2, something like that. Now, I believe the record from back, 1981, 1982, right, back when hyperinflation, I believe the record is 7.1 year over year. I believe it's back in 1982, 1981, right? Back when I came onto this planet, right? So it'll be interesting to see if they can smash that, right? Smash that record with that CPI report. But, all kidding aside, don't forget, as day traders, we really don't care what the news comes out tomorrow at 8:30, right? We don't really care what the number comes out is. What do we care about? We care about how the market reacts to it. So you definitely don't want to miss, that 8:30 to probably 8:30 to 10 o'clock tomorrow, right? The reaction to that CPI report. We, of course, will have a front row seat tomorrow morning in our trade room for that big news report. We then also have another report tomorrow for all the oil traders out there. We got the weekly inventory report tomorrow at 10:30 Eastern time. Now, as I always kind of caution you guys, there's a lot of posturing, a lot of speculation leading up to that news report. So I always give this particular report a 15-minute buffer, at the very least a 10-minute buffer. You will notice that about 10:15, things start to get a bit weird, right, on the price action for oil, and usually about 10:40, 10:45, things will start to calm down. There's been a lot of back and forth from OPEC over the past few weeks regarding production cuts, right? And of course, trying to keep this price of oil balanced. And so there'll definitely be some market moving opportunities in the wake of that. And then if you're around tomorrow afternoon, you got the beige book. Now, the beige book, of course, is the notebook from 2 weeks ago, right? From the Fed's, right, notebook. This will be something that every once in a while, the beige book will surprise us, right? Not necessarily with a big move, but it will surprise the markets, right? It kind of gives you behind the scenes for what the Fed is thinking right now. So, this is probably, I would say probably maybe 60% of the time we see a nice move off of that beige book number. So if you're around tomorrow afternoon and you got some extra bullets left, right, in the in the chamber, you may have, right, some opportunities there, right, tomorrow afternoon. I'll be making sure, though, my biggest focus is tomorrow morning, though, trading the reaction to that CPI report, right? So 8:30 comes out, by 8:35, 8:40, we've got the reaction under control, and we're looking for setups tomorrow morning in our trade room. Don't forget, 8 o'clock Eastern time, we open up our trade room. I'll put all the information you need to get registered. I'll put that right below this video tonight on the YouTube channel description, right, or a big button for you below this video on the trading blog. We've got more coming later on this week. Got some PPI, got some retail sales, so there's no shortage of major news here this second week of the month, and looking forward to a very good day, another very good day in our trade room tomorrow. Let's get back to our charts, though, right? Let's get these charts prepped up and get ready here for Wednesday. Got a wedge on the S&P. Let's talk about the S&P first, and we'll move our way right on through it. What's the most important thing right now on the S&P? The wedge, right? The wedge. The wedge is definitely the most important factor right now. Wedges, we're pretty much a bull market right now, right, into a wedge. Wedges are at least in my trade room, I kind of lump a wedge into a runaway market. The reason why a wedge is very strong, kind of a runaway market, is because usually trends will channel, so the market will go up, it'll pull back, go up, and it will usually pull back to the low of that channel, right? Kind of that first test off the low of that channel, which we know we love. When we don't get that first test, right, what does that tell you? That tells you the buyers are extremely strong, right, and interested. So these wedges, right, are, this is the most important clue. Now, oftentimes, when we run out of space for the wedge, we're going to go sideways up here. So we'll oftentimes, right, run up into that wedge target, and we'll start to go sideways. There is usually a lot of resistance around the vertex of that wedge. And what I always kind of try to focus on when I have a wedge is I like to look for traps when the wedge is relatively wide, right? So trap entries, again, think about it as kind of a runaway environment, right? So we know where the market wants to go right now. When I basically, simply put, when I have space to run until we get to that wedge target, traps, pullbacks, right, will usually work the best. If we get right up into that wedge, though, now we look for a really deep pullback, right? Because oftentimes you're going to see profit taking. There's not enough space up there to buy, and so we'll have to get a nice deeper pullback, right, for that. So the wedge is the most important part of this. It kind of tips you off that you have kind of a runaway market, so to speak. If this was 9:45 tomorrow morning, we didn't have the overnight session ahead of us, I'd be preparing to get pretty aggressive right now, right, for a trap below the low, et cetera, et cetera. Because we're going to the overnight market, we'll have to be a little more conservative, right, just to make sure we protect ourselves on the way up here. Now, you can also see too, right, so the buyers want to get in and push this thing higher. The sellers would love to get back down into that original range where we began this morning, right? Morning starts off inside of a range. We expect expected a lot of ranges today because of the big moves we saw yesterday. So if the sellers, for whatever reason, if the bears can get their hooks in this thing, we definitely have that range acting like a magnet. And boy, oh boy, we may see a very large pendulum swing that may take us back down in the opposite direction here, right? So the bears have to really be careful right now because of all this momentum. But if they can hook, if they can get their hooks in this thing, there definitely is quite a bit of opportunity here, right, for those sellers. So when I see a market like this, strong runaway environment, I start thinking about four different types of pullbacks, right? Four different types of pullbacks here. One of them is a shallow pullback trap, right? One of them is a shallow pullback trap. Now, again, if this was, 9:45 tomorrow morning, I'd be looking to get in pretty aggressively below these prior swings right now with a target up around that wedge. For going into the overnight session right now, I'd like to get underneath that low for sure, right? Ideally, get underneath that low here and then try to get a trap entry in the price action, just to be a little more conservative. So a shallow pullback right now, I would love to see some sort of trap entry, right, for me to get in. Again, may not be the buy off the original trap, but find that price action trap for that retest of that high. If we see a deeper pullback right now, I really like this area right here, top of that range, prior swing high. If we see a deeper pullback right now what I'll do here is I'll try to get those bears to come in and get short. And then once those bears come in and get short, once we see those sellers coming in at the moving average, now we know exactly where their stop losses are. We have all of that momentum for the bulls, and I can use those stops here right now for what I call a failure pattern. And then you can grab that first pullback again on the way up to that wedge objective, okay? So we're buying right into those stop losses with a failure, and then I always like to look for that first pullback once we get back above the moving average for that retest, right, of that high. Now, at what point does a pullback become a reversal? If we can get that pullback, and if those sellers can hold that pullback and run it lower, yeah, now this is a 1, 2, 3 reversal. Now, what I always try to do on these reversals is I always try to go out and find, first of all, a new channel, draw it off the low, find the new channel off the high. Then I look left and I look for prior swings. And you can almost always find some sort of trap or failure or pullback combination, right, for that short off the high of that channel, right? Trap high, buyer failure, and that pullback combination. Now, obviously, right, and this is a 7,000 tick chart here right now. We're not going to trade those setups on a 7,000 tick chart. And I do have some very specific rules that I want to follow to trigger those entries. I'm not going to go over all those smaller details here right now, but if you want to learn all the rules and see lots of examples of those traps and failures and pullback combinations, I provide all the details in our quick start class with a great free trading course on our website. If you're serious about making a career in trading, definitely grab a little pop-up there. You'll learn the same system that we use every day in our trade room. It'll be a great roadmap for you to follow so you can get your act together, right? Get your consistency, get started making some daily income, right, in these markets in your account. So grab that link up there to learn more about the specific entry setups that we like to use. Now, we talked about a couple pullbacks here, right? So a shallow pullback trap, a modest pullback failure, right, into pullback. Those are 2 out of the 4 pullbacks. We'll talk a lot more about different types of pullbacks. We'll talk more about those pullbacks. I've got a couple more I want to share, but I'll do that later on in the video. I would also keep in mind too, again, that if we do keep going higher here, we're going to probably end up in a range at some point. Now remember, ranges act like magnets. And so what you want to do is you want to find some levels of support below the range and look to basically buy that pullback, right? Look to buy that pullback. So let's just say, for example, right, that we end up kind of grinding higher here, right? We go into a trading range just ahead of that wedge target. There's two basic ways I like to trade these situations. I find my support level below the range. I wait for a pullback. Eventually the buyers are going to run out of ammunition, right? Eventually they'll run out of bullets, and the price will eventually now, right, start to pull back. Find those areas of support, then wait for the pullback. Don't just simply buy into the pullback. Wait for those sellers, because they almost always will come in and get short off the moving average. Once those bears get short, I don't want to try picking the bottom, because sometimes that short, they'll stop you out and then go without you. So instead of trying to pick the bottom here, wait for those bears to come in and commit. Think about where their stops are and buy right into those stop losses. Now, that's one way to trade a range. The second way to do it is to mark up the amount we go below, find the target now on the other side. This is very, very important, right? You can see I marked up, right, some pendulums here. It's the same idea that I'm doing over here. So if we break out below that trading range, right, I rope in the sellers with a failure pattern. We then take the amount below the range, we project it above the range, and that now is the goal next. What do? We find a new channel, and repeat after me, first test is the best test, right? First test is the best test. Now that first test off the low of that channel, right? Maybe it's a trap setup. Maybe it's a pullback setup, a failure setup. Again, you'll learn more of those entry patterns, right, in that free trading course. All right. So just be aware of that, right? So that's how the range comes into play. Now, let's say we keep on going higher, right? Let's say this wedge, right, completely gets blown apart. I've got my area of resistance up overhead. You can definitely see we're up at I would say a pretty important top here right now, or pretty important area of resistance. If we can break through that area, we have quite a bit of open space until we run into our next area at 47, we'll say 47.50, right? Just to be safe there. So, let's say, for example, that we open up, right, and the buyers come in and they just jump, right? They say, heck with that wedge, right? Short squeeze. We're going back to all time, whatever, right? What do you do in that situation? You don't chase it. What do? As the market takes off to the upside, clearly breaking through that wedge, we now want to plan our entries. I'm going to mark up that new high, right? Don't be foolish and try going looking for some big channel right now. Stay nice and tight off that high, right? Mark up that low. Think about where those prior swings are, right? Get under prior swings for traps. Use those seller failures into pullback combinations, right? And buy off the low of that new channel. Right? So new channel goes higher. We blast through that resistance overhead, right? That gives us a lot of momentum now. We're buying the trap. We're buying the failure, right? We're buying that first pullback, right, off the moving average. Another way to buy this thing, if it goes higher here, would be a 2-try breakout, right? We open up, the market jumps higher here, right on through levels of resistance, strong move up, shallow pullback, higher high in price. That's a great spot for a trap as well. Right? So sometimes it'll be a small move, a pullback, and a real strong run. We call these 1, 2, 3 breakouts. In those situations, you just simply find your channel, right, and find one of those entry setups we teach in the video course, right, off the low of that channel. If it just simply blasts and then holds that pullback and gives you that higher high, the strength of that first leg is very important. That shallow pullback drives the buyers crazy. The higher high in price confirms, and then we get that, right? We get that 2-try trap, as we say, right, going higher. Can I find a channel? I mean, it wouldn't hurt, right? Not required by any means, but definitely doesn't hurt as well. So again, quick recap on this. We know that, right? We know that buyers are probably going to be looking, right, for a pullback right now. Oh, one more thing here on the S&P. Let's say we keep on grinding higher, right? Here's another pullback that you want to think about, right? Let's say we really grind higher here. We run right into that area. What's going to likely happen? We're likely to see some sort of deep pullback here. Now, a deep pullback is great because it really opens up a lot of potential for a good risk-reward ratio. The problem with a deep pullback, though, is what, right? There's a lot of momentum on that. And anytime we see a lot of momentum, there's a good chance they're going to hold it and take it lower. If we do get that deep pullback, what do? You use the 2-try rule, right? Use the 2-try rule. You go out and you go, okay, let's get the bears trying here, but now let's try twice. So instead of just simply coming down, trapping in those bears and buying into those stops, if we keep on kind of cooking higher here and then a big collapse off that high, think about now the 2-try rule. And as I always say, try to find that trend line, right? Buy off that trend line, find those stops. We're buying into stop losses. And again, the retest of that high, right, is the goal here. All right. So if we do kind of keep on cranking higher here, wait for that nice deep pullback, use the 2-try rule, think about where those exits are going to be. All of that momentum says it's almost a guarantee we go back to retest the high. And again, if we go all the way up and we come back down, if the sellers now can hold that pullback and go 1, 2, 3 reversal, we mark up that low, mark up that high, and first test, right? Maybe we see a bull trap, a buyer failure, right? A pullback combo off the high of that, right, of that new channel. All right. So almost a runaway market here right now on the S&P. Will we get a shallow pullback? Will we see a deep pullback? Will it keep going higher? We get a pretty good game plan now, right, to capitalize on it. Let's keep going, though. How about some Nasdaq? Now, Nasdaq honestly might be a little bit of a preview, right, of what might happen here on the S&P, right? And I say that because the Nasdaq had that big run up, right? They trap in, right? They trap in those bears and they run it up and they start going into that range. You know what I mean? Like that is somewhat likely here on the S&P. We're probably going to get that pullback. The buyers sort of buy it back up, and we're likely to see that range up around the top, right, of that wedge. What's the most important thing right now in the Nasdaq? It's very simple. It's a bull market into a trading range. And so as we talked before, what do you do in a bull market into a range? Ranges act like magnets. So we find levels of support below the range, right? We try to buy at those support levels below the range. If the sellers can hold on to it, where do we go? We're probably going to go back right into that previous range below us and most likely try to take out those lows here. And then what do we do as we go higher, right? We mark up the pendulum swing and we look for that run up to the opposite side of that of that trading range. Where things get a little more interesting here on the Nasdaq is if we keep going higher, right? Because if we keep going higher here, you'll notice we definitely have some resistance up there, right? That 15,895. But as I mentioned in last night's video, we've got that 16,000 round number. So it does seem like the buyers, if they can get this thing to keep going here, it seems like that should be a reasonable target here for tomorrow. So let's talk about what if we go down, what if we go up, how do we buy it, how do we sell it? Now, we talked a lot about ranges before, and I covered briefly here on it already, right? Remember, the range is a magnet. So if we get that run lower here right now, what do? Now, what I'd like to do is, this actually brings up a very important part of this. You'll notice how I've marked up the rotation, right? The amount below, the amount above, the amount below, and the amount above. So think of it this way. If we go lower right now, that is what I would call a failed rotation. Now, what does a failed rotation mean to me? Well, it's not a very bullish clue. So if the market pulls back, you really have to, as I say in the trade room, you got to get some fresh blood, right, in this market. The buyers already came in and bought that thing up, right? So if you bought that pullback, right, what price level would it take to convince you to buy more, right? If you like that price, you probably like it a little bit lower as well, right? Buyers want to buy low, right? So the way I think of it is, if we don't go higher here right now and we pull back, first of all, I want to get underneath, ideally, that 15,730. If I don't, I'll have to use a trap. Right? Shallow pullbacks are fine, right? I just like to use traps because they allow me to buy as low as I can. So a shallow pullback trap, what I'd like to do is, if the price pulls back, is get a relatively deep pullback, right? Get some fresh blood in the market underneath that low, right? Get some fresh buyers on the tape. And then, because of course of failed rotation, I'm going to use that one try, that two try failure pattern. And as always, right, there's a lot of variations of this entry pattern. We can use a trap entry right below that prior swing. We can simply wait for, right, the stops to get run above the high of that second try. Again, there's a lot of ways we can do that. You'll see a lot of examples of these two try failures in that free trading course linked up in the upper right-hand corner. And then don't forget, once we get that failure off that low, now measure the amount below, measure the amount above. We know where the market now wants to go. And what do? Right? We find that new channel and we drill down to our faster time frame, right? And we basically buy off the low, right, of that channel. Now again, I can't tell you what entry setup we're going to use on this, right? Could be a trap entry, could be a failure, a pullback combo, could be a strength move, right? Going back up to retest that high. But the goal of this is again, get us underneath the trading range, rope in those sellers, right? With the two try failure, right? Look like this, strong move down, bears once, bears twice, right? Back up into that trading range, right? So we're looking for that pullback, that failure, right? And that run. If we start to go sideways here, this will be kind of off limits, right? If we start going sideways, we're going to basically sit on hands and wait to execute, right? That pullback plan. If the market goes higher, this will be something that we should pay attention to. We've got that pendulum swing right there. What we have to do is we've got to get through that area. All right. So if I want to be a buyer, I'm going to have to get through that area to give me some sort of proof. What you don't want to do is go buying right into that pendulum swing here, just because for all I know, it's going to swing right back in the opposite direction, and you'll get caught buying high, and you won't have enough bullets left, right, to buy low. So you really want to see this thing, try to push right on through this pendulum swing. What I would be looking for here is think about now how you can take that trend line, right, kind of copy that trend line, paste it up a little bit, right, and you can kind of see how that lines up here now, almost with a channel, right, off of those highs. So now we create this channel. Now think about how this might work out, right? So we're kind of chopping around right now. We break out, right? We break out and run higher. Now we find that channel, okay? Now remember, that first test is going to be a very, very good entry for you. So that's where we look for those traps, those failures, those pullback combinations. Remember, the key is going to be, let's get us through that pendulum swing, right? Really get us a nice push going higher, right? So again, we're chopping around, going sideways here, right? We break out and run higher here. Mark up that high, again, like I've done already. Mark up that low, right? Think about that area. Now all we need is get that first test. Maybe it's a trap setup, right? Off of that low, right? A failure setup, right? A pullback combination, right? Off of that low. Think about that new channel, but also to make sure, right, that we get through that pendulum swing, right? Buying off the low of that channel. What would make our job even easier, okay? Let's face it. What would make our job even easier here would be if we can get a real strong breakout of this trading range, right? Get that 1, 2, 3 breakout pattern. Again, we're not going to buy, right? We're not going to buy this one because we're still waiting for that proof, right? But once we get that 1, 2, 3 breakout going higher here now we can mark up that high, we can mark up that low, we can drill down to our faster time frame. This is a 4,000 tick chart, right? We can drill down to our faster time frame and find the entry right off of that low here, right? So that's going to be one thing to kind of keep an eye on as we go higher here. We can also look for that 2-try breakout we talked about on the S&P, strong move up, shallow pullback, higher high in price, that trap set up. And your objective at that point, remember, the breakout leg is the measuring leg. Okay, so the breakout leg will be the symmetrical part of this. So that breakout leg, then what we want to do is measure that leg and then project it off the deepest part of that pullback. That's going to give you that next target. Does that make sense? Right? So if we were to see like a 1, 2, 3 breakout, right? Something like that, that breakout leg, right? That breakout leg is the measuring leg. We pull back, we go, it's that leg up to that leg right there. Okay? Don't worry about the middle leg. The middle leg is usually the oddball. Okay, so that will tell you kind of where that next objective is going to be. It's usually very symmetrical, right, to that breakout. Or we see a strong move up. We see that, right? We see that shallow pullback, that higher high in price. We grab that trap, right? Where's our target going to be? It's the size of that breakout leg. That leg right there is equal to that leg right there. That's where you're right. That's where you're hunting for that next target here. Okay, so we got a couple options here as the market goes higher. How would we sell this market right now? What do you think? How would we sell this thing? Well, we've already talked about that 1, 2, 3 reversal, right? Selling off the high. That first test is always the best test, right? So remember, it doesn't matter how strong that initial leg is. All that matters is, do they hold the pullback off the moving average? Right? Couldn't do it there, couldn't do it here, right? So the bears have to hold it. If the bears can hold it, then we can simply drill down and grab that, right? And grab that first pullback off the high of that channel. What we may also see here is, because that range, of course, right, is below us here, is one of those grind breakouts, right? Like this. It may take off the downside and it may start to grind going lower here. That is good enough, right, for a reversal. When it starts to grind lower, these look like spiking channels. What you want to do is mark up that low, find that channel high. And like I said, I like to go out and find those traps off those highs. Trap of the high, buyer failure off the moving average, right? Pullback, etc. Trap set up, failure set up, right? Pullback set up. Where's my objective? Right? Where's my objective? All the way down at those lows. But remember, the breakout leg, right? That leg right there will be equal to that leg right there. That'll be the most reliable target, right? The sellers, of course, they want to get all the way back down to that low, right? But we want to take our profit off the most reliable spot. It'll again be equal to that breakout, right? That breakout leg going lower. So the big question right now is, do we see the pullback? Does that pullback turn into a reversal? Do we go sideways? Right? Do we get that pop and run higher? Time will tell right now. I think there's a very good likelihood that we end up getting, one of these types, right, of channels here right now, right, and getting that trap failure right off of that low, and then using that leg as the measuring leg as with the 16,000. Keep your eyes open for ranges. Right, a lot of big moves in these charts right now, so ranges are obviously on our radar for the same reason why we talked about in last night's newsletter. Let's keep going though. How about some oil here right now? Yeah, oil definitely kind of combines the best of both worlds here. First things first, what's the most important thing on the oil right now? When it comes to oil has a very strong run up, and it does look like we're now settling into probably a trading range. Now, if this was 10:15 tomorrow morning, or I guess tomorrow's Wednesday, if this is 10:45 tomorrow morning, I would say get ready for a buy off of that channel. We see this quite a bit in our trade room, where you'll see a really strong pop. The market will kind of chop sideways, and you know me, I'm always watching for these 1, 2, 3 moves, finding those channels, right, and grabbing that first test. A bit of a gamble, right now, because again, we're in the overnight session right now, right, going into Asia. If this was tomorrow morning at again, 930, 945, I would say that is definitely worth taking. It's a little bit less reliable because you're buying relatively high or you're buying close to that range. But in those situations, what I'll usually do is I'll go only 1 or 2 contracts, right? I'll go a very small position size, right, on something like that. And if I get the lucky, the deep pullback, then we go more of a full size position. So that's one thing that I notice kind of right away here. Bull market into a trading range. I'll tell you, the sellers don't have a lot to work with right now because this trend line, right? You got this rising support trend line. So, there really is quite a bit these buyers can do right now. I really like this area of support down here in this 80.35 area. This whole area between that prior swing, we got a prior swing high over there, right? So it's not difficult to find a lot of support levels stacked up in this area right now. And with the buyers with such a strong move going higher here right now, you would think they'd be eager to buy those pullbacks here right now. So bears have a bit of a challenge in front of them. Doesn't mean they can't reverse this thing, but it definitely means we got to pay attention on this because of that, right? Because of that rising support trend line. If we do obviously go sideways, we'll want to sit on hands inside this trading range. If we go higher here, we've got a really important level here at 82.35. This is a big range from, I can't recall exactly the dates it was from, but a month and a half ago before the end of the year. 82.35 is the next kind of big objective. And then from there, we go up to that recent big top at $84 a barrel. We may see them try to make a run for that at some point tomorrow here. Well, I guess it'll depend on what that news report comes out tomorrow, right, regarding the oil report. So bottom line right now is it's a trading range. Again, if you're up for a bit of a gamble here in the overnight, right, that long off that channel, again, it is a bit of a gamble. It's worth taking it during the day, during the morning session when you get a lot of volume, a lot of people speculating. In the overnight session, right, maybe a little bit more of a gamble than I'd like it to be here. So be aware of that. First thing I think of is a shallow pullback trap. Right? Got that trend line coming in. If the market pulls back right now, we bounce off that trend line. Try to find that trap entry. That will keep you out of trouble so you're not buying inside that trading range, right? Traps are great whenever you have a nice or a very shallow pullback here. What I'd like to do is get down in this area, right? Really get down into that area now. Now what I can do is I can get those bears to come in and hopefully they'll try to hold off of that trend line, right? If those bears now come in and get short, where are their stops? They're right above the high, right? The range is a magnet. All of that bullishness, buy into those stops. If you get lucky, and I say lucky because if we get fortunate to get the entry to buy that first pullback, great, right? So failure into that first pullback, I say get lucky because you're going to want to navigate and stay just outside of that trading range. What I'll usually do in those situations is I'll grab a buy limit order underneath the price and I'll slide it just underneath that trading range to see if they'll get me in before they kind of get sucked back to the high, right, of that range here. So shallow pullback trap, right, relatively deep pullback is going to be that failure. If the bears can actually hold that pullback and go, what is that called? It's called a 1-2-3 reversal. 1-2-3. Remember, it doesn't matter how strong the initial leg is. It's all about what do they do after the pullback. They have to hold that pullback. If they can, we find that low, right? We find that high. Again, a lot of times there's some sort of trap set up there. Trap, failure, pullback combination for that short. Again, same kind of idea here that we talked about on the Nasdaq. We get a range down underneath us. Let's say the market takes, right, a move lower. Let's say it starts to grind, right, and move lower here. That's very, very common when you see reversals like that. Buyers are getting out. The market kind of slides lower here. Don't chase after it. draw that trend line nice and steep. Think about where those traps are going to be. Grab that trap, that failure, that pullback combo. Whenever we see that mark kind of grind down like that, right? What do? You draw that channel relatively tight, okay? Don't be trying to find these big channels like this. By the time you go up here, this is probably going to be a reversal instead, right? So just be aware of that if the market rolls lower here, right? Maybe it grinds down. Maybe we find that new, right? That new channel going lower. We're going to keep an eye on that. If you go sideways, right, we're staying patient. What if you go higher here, right? What if the market goes higher? You know, for the most part, this range, it's okay, but really you could say it's only kind of a double top right now. We'd like to see a little more proof of this range right now. This could easily, just like the Nasdaq, you could easily kind of see how, right, this thing could easily start to go higher here, right, and we're grabbing our traps, our failures, right, off the low of that channel. You could also easily see how this market, right, may take a run going higher here, and because of the strength of that move now, we know the odds are very high they're going to retest that high. So we mark up that high, we mark up that low, we try to get underneath the moving average, rope in those bears. Maybe I can use that, right, that prior top as a key area of support, find that failure, that pullback, right, combination. And then don't forget the size of that breakout leg, right, is oftentimes the size of that next target, right? So think about the size of that breakaway leg. That'll be an easy way to run, right, where that next objective is going to be. As we go higher here, you know, again, we've covered a lot of these already, right? That strong move up, that shallow pullback, right? That higher high. Don't worry about where you are on those situations. Just wait for that trap entry. Again, if you can grab a channel off the high, even better. It's not required whatsoever, because if you have enough strength, a shallow pullback and a higher high, it's almost a guarantee people are going to buy, right, that trap. Here you can see an example back here, right? Strong move up, pullback, higher high. Everybody wants, right? Everybody wants those traps. So we'll keep an eye on it, right, up there as well. And that break with a grind can work here too, right? Let's say we pop up here and we start to grind. We start to grind here. Perfect, right? Draw that channel off the high, find that low. Think about those, right, those prior swings. Get underneath those prior swings, under the moving average for some traps, some pullbacks, some failures. And again, don't forget, you're going to see a lot more details of the entry patterns, the entry setups, how we take them, when we skip them. I cover all those good stuff, or all the good details in that free video course on our website. All right, guys, I think we're looking pretty good here right now. Again, we got the oil report tomorrow morning at 10:30 Eastern time, so we'll see what happens here. The range, will it pull back? Will it keep going higher? You definitely have a pretty good plan of attack, though, no matter what we get here on the oil. Now, don't forget, tomorrow morning, every morning, 8 o'clock Eastern time. I want to see you there trading right along with us. Think about how many winning trades have you missed this week, right? How many losses have taken away your previous winners this week, right? My focus in our trade room is to make sure our students know exactly where the best trades are each day, and most importantly, how to avoid those losses, right? How many missed trades have you missed this week already? We're not going to miss them tomorrow. So make sure you come out and see me tomorrow morning in the trade room. I'm going to make sure you know where the best setups are and which trades we're going to avoid, right, because of the rules we use. Don't forget all the details you'll need to get registered in the description of this YouTube video. If you have any questions for me, right, call that toll-free phone number there for me. I would love to answer any questions that you might have. Drop any questions in the comment section below as well. And I hope by now you subscribe to our YouTube channel. Hit that like button. Do what it is you do here on YouTube. And I'll see you tomorrow morning, right, 8 o'clock Eastern time. Don't be late, because that CPI report is not going to wait for you tomorrow morning. So don't be late tomorrow. If I don't see you tomorrow morning, we'll see you guys tomorrow night, and we'll do it all again and get us ready for another big day on Thursday. Have a great rest of your day out there, guys. Thank you so much for tuning in. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.